Welcome back to the Inner Circle Show and welcome to Season 2. And in light of trying new things and making sure this show is as good as it can possibly be, I'm going to be changing the format up a little bit. So instead of having a main show every day and then a separate Palantir and Tesla segment, we are now just going to do a Palantir video and a Tesla video every single day. Now I am still on jury service this week, so there may be, not as many videos as I hope, but we'll just have to wait and see, and I'll be back up and running as soon as I can. So in the world of Tesla, we have quite a lot to catch up on. But before we get into all of that, don't forget to like this video, subscribe to the channel, and turn notifications on so you do not miss an upload Monday through Friday. So the first thing I want to discuss is this whole narrative, this whole apparent delay in the Robotaxi event, which was meant to happen, which was scheduled for the 8th of the 8th, the 8th of August this year. But according to a recent Bloomberg article that came out, apparently this event is no longer happening in August, and instead it has been pushed back to October of this year. Now I have a few thoughts on this. Number one, the most important thing I think is to recognize that this has not been confirmed nor denied by Elon Musk or Tesla. So we don't actually know whether this is accurate or not at this current time. But we also know that time and time again, the mass media don't always report the truth and what is accurate. And we know this in the case of Tesla especially. Now, I'm not saying that this is the case this time at all. This could actually be completely true. And I suppose in time we will know. But I'm just saying, again, articles come out quite often that just don't have much validity. Bloomberg have said that the reason for this delay, the reason that this event has been pushed back by a couple of months, is to allow the teams working on this project, the Robotaxi project, to have more time to build additional protocols. And apparently this was communicated internally. So maybe it was a slip of information that wasn't meant to be released yet. Maybe there's no truth in this whatsoever, or maybe this is completely accurate and we will soon see Tesla confirm this. But the crazy thing here is, and we see this time and time again, yet I'm always surprised. I really need to stop being surprised by this. But this report came out and we saw the stock drop dramatically. It went down by like 7%, which actually paused an 11-day streak of stock gains, which I think a lot of the Tesla community were very excited about. Now, of course, a 7% drop is actually quite nice. I personally bought more on that day. I don't know if you did as well. But these things happen. But I'm just saying time and time again, an article comes out that may not even be true, yet it has such an impact on the stock. Whereas something is released from Tesla that is absolutely true, that is really bullish, and the stock doesn't really move all that much. It just is a bit crazy. Now, if I sit and I put my logical thinking hat on here, and I think, well, why did that cause a 7% sell-off? I think it's because, it's just due to concern among retail investors and institutional investors that this could mean that there is a possible delay in FSD and the eventual Robotaxi rollout. And I suppose when you pair that with the delays that Tesla's had in the past, maybe people aren't so happy. Maybe people think, okay, well, this really isn't going to happen anytime soon. I'll sell off. Maybe it was just perfect timing to start taking some profit off the table with the, like I said, the 11-day run-up that we've had. I don't know. Do I think it was warranted though? No. My opinion is that even if this is true, even if we're seeing a 2-month delay in the event, it just doesn't matter whatsoever when you zoom out and you think about the bigger picture. If my investing horizon, my investing timeline for Tesla stock was, 6 months, maybe it would matter a lot. However, I am planning to hold this stock for a very, very long time. So even a 6-month delay, a 7-month, an 8-month, a year delay, it would be pretty annoying. And I would be like, I want it to happen as soon as possible, but it doesn't really matter, especially this short-term delay, if it's even true. But then I think, okay, well, why are they delaying it? Is it a bigger issue here? No. If they are truly delaying it just to build some extra prototypes, then how is that a bad thing? It could literally be a strategic delay that is necessary for a more comprehensive rollout. And there are many, many eyes on Tesla for this event, many eyes. So they want the event and the rollout to be as good as it can possibly be. I've also heard speculation that the delay is due to the design team wanting to rework certain elements of the car. Now, again, that hasn't been confirmed. I don't know if that is a reason alongside the additional prototypes, or that is the true reason the prototypes is not. I don't know. But either way, this to me would say that nothing bad is going on. The software isn't at fault. There's nothing really wrong. A design rework or additional prototypes, again, isn't a big deal. Dan Ives reacted to this, as did many people, and he actually said that the Robotaxi event will be a historical day, whether it's on the 8th of the 8th or the 10th of the 10th. It will still be a jaw dropper. And I agree with this, and I just think it comes down to short-term versus long-term vision. And as an investor, which one do you have? And that probably is going to elicit which of the reactions you actually hold, whether this is really, really bad or it just doesn't really matter. We also have to remember that the financial impact of robotaxis on Tesla is going to take some time. It's not going to happen overnight. It could take several years to become significant. But either way, Tesla are still very, very much the leaders in full self-driving, in autonomous driving technology, and they are still looking like the leaders to actually produce a large-scale robotaxi fleet. But one company that maybe isn't so happy with this and isn't so happy with Tesla is UBS, who have downgraded Tesla to a sell rating with a price target of $197 per share. In the full report, which I'll allow you to read in your own time, the analyst speaks about a range of different things, from how he feels it is now becoming increasingly difficult to justify Tesla's valuation, to how there's been a massive run-up and now could actually be a good time to exit and take some profit. He talks about whether or not Tesla is just a car company and whether even Tesla Energy can keep growing at current rates. But I want to just read an article that reported on this report. Tesla downgraded to sell at UBS, valuation premium too significant, analysts said. So this is an analyst named Joseph at UBS, and let's just take a look at what was said. So Tesla stock, just to bear in mind, this was written on Friday. Tesla stock is trading higher on Friday despite a prominent analyst slapping a sell rating on the stock, with valuation the chief culprit. Tesla, which slid 8% yesterday, that's just due to a potential, not even a confirmed, robotaxi event delay. And like I said, even if it is delayed, it doesn't matter. I don't know why it caused an 8% or 7% decrease, whatever it was. Following reports that the EV maker was going to delay its upcoming 8th of the 8th robotaxi reveal, is still nearly flat for the year despite a steep early year sell-off. Yeah, that's what we've got to remember. When we look at Tesla and we see an 11-day increase and we're starting to think, oh, is it a bit expensive now? I don't really want to buy any more at this point. Zoom out. Zoom out and then have your reasons in play as to why you think this is going to be a long-term hold, why you think this company is only getting more valuable, what they are solving, what they have to offer, and then decide if you still think you should dollar cost average in or actually you should hold back a little bit. So your own personal decision. It's the sharp climb back higher for Tesla stock, nearly 30% in the past month. Yeah, it's quite significant actually, but Tesla does move very, very quickly in the upward or downward direction. And that's what the analyst is worried about. So he said, Tesla has always traded with a premium attached to it for other future growth initiatives. However, at current levels, we believe that unidentifiable premium is just too significant. So he is basically saying that they don't really see a true reason that is justifiable at this point to be given it a higher valuation, which a lot of analysts have this problem with Palantir, with Tesla, with other growth stocks, because right now, when they're looking at the financials, when they're looking at what is in front of them on paper for Tesla, they are not seeing the true implications of what Robotaxi, what FSD, what Optimus could actually do for Tesla as a company, for the market cap, for the stock price. They are having to very much base their analysis on what is happening here and now, or what is coming up very, very short term that they could actually feed in justifiably. You know, that's kind of how they're looking at it. Whereas us retail investors, I guess we kind of have the advantage somewhat that we can step back and we can say, I am okay with buying this at a slightly higher price right now because I know what they're working on and I very much trust that they are going to get there. Given the lack of visibility and the risk that these growth opportunities materialize on a longer time horizon or don't materialize at all, we rate the stock sell. So he is basically saying there that they are giving it a sell rating because it's very, very unlikely. They don't think that these dreams of Tesla will actually become anything. I completely disagree. The analyst is also acknowledging that Tesla is more than just an auto company. Good. I think we are very much past that anymore. A claim that CEO Elon Musk has been, he's been saying this for ages. Years and years and years, and you know they've had their energy segment for quite a while, and I think that alone and the technology within the cars, those two things alone should very much tell us that it isn't just a car company. And then with everything else they're doing now, even more evidence. He's contending that Tesla is an AI, robotics, and autonomous tech company first, automaker maker second. Yes, the reason he is saying this is because what is going to happen is the amount of money that they are getting from the automotive segment versus everything else is going to become very, 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 very small in comparison over time. He's a man that thinks long term. Read the book that Walter Isaacson has written. It's very, very clear that Elon thinks future. He doesn't necessarily think about here and now. He's thinking what is going to happen, and he sees a very, very clear path on how that's going to happen. SPAC also credited Tesla for positive developments in other areas, such as its energy business and FSD, or full self-driving software. But again, valuing those businesses and their long-term potential is difficult. Yes, it is difficult because we don't have the numbers right now, but we can make approximations. We can think about the real world implications. What industries are going to be disrupted? How many customers, the total addressable market? What sort of money could they be charging? What are the competitors? All of these things we can think about, and that gives us a good insight into what could happen for Tesla. Then we think, okay, well, have they got the track record of actually making these things happen? Do they have the factories in place? Are they good at mass manufacturing? Are they good at scaling? Are they vertically integrated? Do they have a leader that has a very fierce vision? That's what I think about. So the valuation breakdown found that at current levels, the market is valuing Tesla's core auto business at around $60 to $90 a share, given its current sales trends. Okay, so just looking at the core auto business, they are thinking between $60 and $90 a share. Obviously, if that is all Tesla's doing, and that is truly the value, which I probably wouldn't agree with, truly the value, then it's way overvalued, and we should not be holding this company. But like I said, I don't agree with that at all. I think there's much more going on, and I think the automotive segment alone is very, very strong. It's strong globally. It is strong in China, even though there's a bit of competition. It's strong in North America, Europe. The sales will increase. The thing with EVs, with the automotive industry in particular, is it's very, very cyclical. It doesn't just follow a straight upwards trend. Sales are going to go up and down over time, but over time, they will gradually increase. And the EV market is expanding, all of these things. Alone, that doesn't even matter anyway, because there's everything else that plays into it. With other businesses like energy, robotics, autonomous, etc., making up the rest at around $175 a share. Obviously, it makes a lot more sense to give a higher amount per share to the other areas than to the automotive, because there's a lot more money to be made there, SaaS margins, all of these things. The UBS analysis finds that those other businesses are worth around $93 a share in their view, meaning there is still a 60% premium attached to those businesses, a bridge far too far for UBS. Hence the sell rating on Tesla and $197 price target, which the UBS team believes accurately values Tesla, its core auto businesses, and other endeavors. SPAC acknowledges the bank could be proven wrong. Tesla stock has traditionally traded more on momentum and not on company fundamentals, and this trend could conceivably continue. A wild card worth noting is Tesla's upcoming Robotaxi day, though it may be reportedly delayed until October per Bloomberg. So this analyst believes that the market sentiment is more negative than positive heading into the event, and a true upside surprise could happen, meaning the product or its functionality could be more advanced than initially thought. While the UBS team believes Tesla is making good progress with robotaxis, it thinks the challenges are still far too great and payoff far too far off. We believe robotaxis are a difficult technological endeavor, and the business model also may face regulatory hurdles as well as questions around customer adoption. Thus, we believe a meaningful robotaxi operation in the US is further out, not this decade. I personally completely disagree with that. I think that all of the revolutionary technology that has come before, all the revolutionary products that have come before, all the revolutionary changes in the way we live are deemed impossible, are deemed to be very, very far off, and are deemed to not be able to actually take place as the people that are behind them things are thinking it will. I think Elon's already proven, Tesla have already proven that they've got the talent in place to achieve the impossible. They've shown that time and time again. And yes, there might be some regulatory hurdles. There may be some customer adoption initially having some issues. I don't know. It's all short term. It's all not going to matter. I stand by the opinion that Tesla will be the leaders and will be the ones to achieve this on a mass rollout. Finally, SPAC said a new, cheaper vehicle, one that Tesla has promised will be unveiled soon, would be more meaningful than the Tesla Robotaxi and could make the firm upgrade its long-term Tesla sales model. So he's thinking about a mass affordable vehicle. We've got to remember that all these things are going to come into play with each other. But yeah, I do think that a cheaper vehicle would really help Tesla out. But it's just one small thing among many, many things that they're working on. Estimate that the standard car or compact market at around 1 million cars a year in the US, and given Tesla's historical market share of around 40 to 50% for the mid-size EV market, the Model Y and the Model 3, the opportunity for 450,000 annual compact EV sales is within the realm of possibility. Tesla currently has 27 analysts rating the stock a buy, or the equivalent, with 19 rating it a hold and 14, including UBS, giving it a sell rating. So like I said, I do understand where the analysts are coming from in terms of what they actually need to look at to be able to make their ratings, to make their price targets. I personally, as a retail investor, don't have to do that. I can look into the future. I can put all of these different things into play. I don't have to just see what's on the top and bottom line right now and go by that. Now, this isn't financial advice. I'm not qualified to give that, but I personally, just to be transparent with you guys, I'm very much viewing this still as a buy. I am accumulating Tesla shares as much as I can, and I plan to hold this position for a long time. This is a long-term hold for me. So do let me know what you think about all of that in the comments below. Don't forget to give this video a like. Thank you so much for watching, and I'll see you in the next one.